Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 31st of July 2023 and here are the top stories for the day. Why are Indian corporates so keen on banking? What makes Bharat Mandapam significant? Are the markets entering a consolidation phase? And what is the Global Biofuel Alliance? Mahindra & Mahindra has recently acquired a 3.53% stake in RBL Bank and they are eyeing up to 9.9% stake as revealed in an exchange filing. Interestingly, they are not the only ones with such ambitions in the lending sector. Aditya Birla Group and Anil Ambani's Reliance Capital have also shown interest in the past. However, due to regulatory restrictions, large corporates in India cannot establish their own banks. In our first story today, Bhashwar Kumar speaks to experts to uncover the reasons behind this growing interest of Indian corporates in the banking space.
The lure of the banking sector continues to tempt India's large corporate houses. On July 26th, automobile major Mahindra & Mahindra acquired a 3.53% stake in private sector lender RBL Bank for 417 crore rupees. In an exchange notification, the company said that it could consider further investment subject to pricing, regulatory approvals, and required procedures. However, under no circumstance would it exceed 9.9%. In a separate July 26th exchange filing, RBL Bank highlighted that RBI's prior approval was mandatory if a shareholder wishes to acquire 5% or more of the bank's shareholding. The bank also said that no such application has been received till date. The filing came amid media reports that the Mahindra Group could be seeking a larger strategic stake in the bank. So, with M&M also jumping on the bandwagon, why have India's big businesses been keen on entering the banking sector in the first place?
Worldwide, large business houses somehow or the other have that aspiration of owning a bank, and it's a highly leveraged business. Because on a capital adequacy of about 12 to 13%, the rest is deposits, and it's a leveraged business. The leverage is not in the form of a debt. You're not writing a debt. What you're really doing is you're collecting deposits from various deposit holders. You're of course responsible to them as a promoter of the bank, but you're at least leveraging the balance sheet quite well. That may be one of the major attractions. With 11 or 12 rupees of an investment, you're carrying let's say a balance sheet of 100 rupees. So that could be a big attraction, quite honestly.
Corporate India's interest in banking is not new. If you see in the past, the Birlas had applied for banking, the Tatas had applied and then they withdrew. So why the interest? I think it's pretty obvious because India is such a huge market. Where else do you get that kind of market? And it's still under-penetrated, still underserved market. Our bank are still, they're scratching in the surface. Which is why you find that say DBS got itself locally incorporated a foreign bank and took over a bank here for the branch network. So it's simply the market.
A retail lending boom has been underway for some time now, with banks disbursing 10.9 trillion rupees in loans to retail borrowers between December 2020 and 2022. Compared to 4.7 trillion rupees to industries during the same period. Indian corporates may be trying to cash in, as retail credit has ways to go before slowing down. There is room for growth too, since about 130 million Indians lacked access to formal banking at least till 2021, according to a World Bank report. But the RBI has not been keen on letting big businesses into the banking space. In November of 2021, the regulator had kept silent on its internal working group's proposal for granting banking licenses to big corporate houses. The cautious outlook is not new. Post-liberalization, licensing rounds for private banks were done in 1993, 2003-2004 and 2013-14. However, corporate houses did not find favour, even though the Bajaj Group, the Aditya Birla Group, and Anil Ambani's Reliance Capital had shown interest. Eventually, the on-tap licensing regime of universal banks was brought in 2016. But large industrial houses were excluded from its purview.
So if you are an industrial conglomerate or an industrial house and you have several businesses, these businesses have cyclical risks basically. They normally have problems with either liquidity or they have problems with profitability or growth periodically. Now, the banking regulator wouldn't want, the liability to spill over or those risks to spill over in the banking balance sheet. Because then in that case, unnecessarily, the deposit holders of the bank would suffer on account of, the promoter may be making no mistake. You would have very good governance, you would have practically, everything that is required to run a good bank. But at the same time, because industrial businesses, in any given sector, they are cyclical in nature. Periodically, they have their ups and their downs. And liquidity could become a major issue particularly during the downturn in the economy. When liquidity does become a major problem. In such a scenario, there could be a systemic risk, but the regulator would like to avoid that. So,
the corporate interest in banking is not new, but they have not been allowed to enter into banking. And globally, if you see, there is no uniform rule. Certain countries have allowed the large corporations to enter, certain countries have not. There are the pros and cons. India has not yet made up its mind. So even if Mahindra wants to get into banking, as of now, it will not be able to go, at best it can go up to 10%, not more than that.
Partly as a result of the current regulatory norms making it impossible for a business house to enter the banking space, the likes of the Adani Group, Reliance Industries Limited, and Godrej are making aggressive moves in the non-banking financial services space. And RIL's Jio Financial Services recently got valued at 1.66 trillion rupees, making it India's third biggest non-banking financial company. But could Indian corporates buying stakes in banks lead to concerns of backdoor entry into banking?
There is no such thing as back entry. There is entry. And if you cannot get into a banking kind of a permission or an approval from the regulator, there is no such thing as back entry in case of banking. Any amount of, let's say, controlling interest in a bank, if you have, you cannot have it to begin with without the approval of the regulator. So to that extent, that back entry is denied. A fit and proper is even conducted for transfer of equity of a banking company by the regulator beyond a certain threshold percentage. So in that case, there is no such thing as back entry.
While Indian business houses may find entering the banking sector an attractive bet amid the government's stress on increasing credit penetration and the rapid growth in digital banking services, concerns that this could lead to practices like connected lending and self-dealing are likely to keep a banking license out of their hands. Meanwhile, the RBI will also continue monitoring any significant stake buys by them in private banks.
His banking aspirations may be keeping Anand Mahindra busy, but the social media savvy industrialist took time out to laud the recently inaugurated Bharat Mandap at Delhi's Pragati Maidan complex. Hailed as a symbol of emerging India by Prime Minister Narendra Modi, the new International Exhibition cum Convention Centre is all set to host the G20 summit in September. So what makes Bharat Mandap significant? Abhijit Kumar brings you the answer.
After nearly 51 years since its inauguration, The iconic Pragati Maidan complex in Delhi has been redeveloped as an international exhibition cum convention center. The new IECC will host the upcoming G20 summit in September and is set to be the country's largest conference and exhibition venue. Prime Minister Narendra Modi inaugurated the IECC on July 26, now renamed Bharat Mandapam. The complex is spread over 53,399 square meters and has a capacity to seat 7,000 people. That's larger than the Sydney Opera House. A PMO statement said that the redeveloped complex is designed to host large-scale international exhibitions, trade fairs, conventions, and conferences, among others. The new complex features an amphitheatre with a seating capacity of 3,000 to host performances, cultural shows, and entertainment events. The exhibition halls offer 7 innovative spaces to showcase products and ideas. These halls also provide a platform for exhibitors and companies to engage their target audience. The space includes parking space for over 5,500 vehicles. What are the major differences between the old and the new architectural designs?
Well, the Pragati Maidan is a complex of about 123 acres in area, and there were several buildings that were put up here. Some of them are exhibition halls, and the others were buildings that were dedicated to different states of the country. So obviously, because that was built a very long time back, so therefore the technology at the time was very, very different. And now, in addition to an exhibition space, we also have an auditorium. We also now have an amphitheatre, which was also not there earlier. So in terms of the architectural design, there is a major change.
In terms of design, the building's elliptical shape is inspired by the conch shell, while the walls and facades carry several forms of traditional art. The government first approved the Pragati Maidan redevelopment project in January 2017 at a cost of Rs 2,254 crores. The project, owned by India Trade Promotion Organization and executed by NBCC India Limited, was eventually completed at around 2,700 crore rupees. The older Pragati Maidan, meaning Progress Grounds, was designed by architect Raj Reval and was inaugurated in 1972, commemorating India's 25th year of independence. The international trade fair it hosted showcased India's progress. Reports indicate that architect Reval drew inspiration from Mughal architecture, evident in the use of perforated stones or jalis throughout the Hall of Nations and elements from the design of Humayun's tomb. Let's understand the cultural and political symbolism of the older Pragati Maidan.
It was called Pragati Maidan because it was symbolizing progress. Pragati Maidan used to be frequented by middle class people who would actually access this space because large exhibitions were put on over there. The structures were also reflective of India. There were large spaces which then, over a period of time, began to be used for activities which were promoting positive cultural and social trends, including, say, for instance, the book fair, the impulse to start places with a new history. It hasn't grown organically. It's not conceptually growing according to, say, the way in which planners or architects or whatever it is have created the space.
The redevelopment of Pragati Maidan began in 2017 amid fierce opposition after several existing halls, including the iconic Hall of Nations, Hall of Industries, and the Nehru Pavilion, were demolished. The government's Heritage Committee had refused to classify the structure as heritage, which would have protected them by law on the plea that the structures were less than 60 years old. So, what was the motivation behind a completely new structure instead of reforming the old one?
The old one was actually several small buildings. There was no one large building which could accommodate 7,000 people at one place. So therefore, the earlier buildings were totally outdated. Many of them were actually crumbling, and therefore we needed a complex that would reflect the emerging India. It was just not be possible to retrofit any of the earlier halls. So therefore, they all had to be pulled down. They have lived their useful life. The Pragati Maidan complex also did not have so much amount of parking that we have now. So now these modern halls will, obviously again, they will have their own life, and technology changes over a period of time. So as requirements change, the building complexes have to change.
Bharat Mandapam stands to symbolize the rising stature of the country that the centre is attempting to project. While architects have called it a timely intervention, it has faced opposition from historians and art lovers for forcible projection of culture. But for now, India is all geared to host the G20 nations in the newly built Bharat Mandapam.
After opening the complex, PM Modi claimed that India will become the third largest economy of the world in this third term. The US, on its part, has been grappling with high inflation. Last week, the Federal Reserve hiked rate by 25 basis points, taking the benchmark borrowing cost to the highest level in over 22 years. But the commentary did not provide the kind of clarity markets were looking for on the rate hike trajectory. So, will this lead to near-term consolidation in Indian equities? Harshita Singh brings the report.
The US central bank's 25 basis point rate hike last week, although on expected lines, still led to volatility on Dalal Street, while investors were looking for cues that this may be the last hike of the current cycle. The central bank left the door open for more tightening, if warranted. In Fed Chief Jerome Powell's words, to return to the 2% inflation target, there is still a long way to go and so much left to do. Thus, experts note that at least one more rate hike remains on the cards.
As widely expected, the Fed hiked the rates by 25 bips, looking at the data. More importantly, not while the tone in the statement was a bit of hawkish, but in the press meeting post that, they expected the economy to grow moderately to modest. And that gives us belief that probably we are towards the end of the rate hike cycle. At best, there might be one more rate hike, and that will also depend on the data which comes out.
US GDP for the June quarter also accelerated above expectations to 2.4% last week, which further signals that the Fed could remain firm on its tightening cycle for a while. As regards rate cuts, there will be none this year, the central bank has maintained. Against this backdrop, equity markets could consolidate in the near term, especially given the sharp rally in recent months.
In the near term, equity markets might be volatile because of the increase in the rate and expectation of another rate hike by 25 bips in few months. But over medium to long term, our belief is that as the interest rate cycle peaked out and inflation gets settled, equity markets will take it positively and will touch new heights.
After the consolidation phase that is expected to last nearly a month, technical analysts too expect the markets to resume their journey north.
From here on, we can see Nifty heading towards 20,500 levels, holding a support of 19,300. Similarly, for Sensex, we can expect a rally to 72,000 marks with a support placed at 65,100 to 65,300 levels.
Given the lack of clarity on whether the US Fed will go for a hike or a pause in the September meeting, equity market sentiment could remain under check in the next few weeks. Today, on July 31st, the street will react to the Q1 numbers of NTPC, SBI Cards, and MRPL, among others.
He's making plans for an early retirement. Business Standard.
FPIs, it looks like, are on a buying spree these days. They pumped in more than 47,000 crore rupees in Indian equities in June, most in this year, as their belief in the country's growth story remained intact. And it is not just the FPIs. Countries too are reposing faith. At the recent G20 meet held in Goa, 19 nations joined India as initiating members of Global Biofuels Alliance. And this alliance is getting support beyond G20 too. But what exactly is the Global Biofuels Alliance? Abhijit Kumar has more on it.
The search for energy has long been driving us to delve thousands of feet below the Earth's surface to dig out coal and petroleum products. But these resources are limited, and the world is now looking for alternatives, which are also less damaging to the environment. But we don't need to look far for that. India is one of the leading countries which has started using biofuels to run its vehicles. Just a few years ago, very few would have imagined that the humble sugarcane will drive our cars one day, but it is now. Biofuel is any fuel derived from biomass or organic matter. This includes any plant or algae material, including wood or animal waste. They are considered renewable sources of energy because these fuels are continually being replenished naturally by the cycle of life. Due to the lesser requirement for processing, biofuels can be quickly integrated into the energy market, especially for transportation needs, like sugarcane ethanol, which is an alcohol-based fuel produced by the fermentation of sugarcane juices and molasses. Because it is a clean, affordable, and low-carbon biofuel, sugarcane ethanol has emerged as a leading renewable fuel for the transportation sector. India achieved the target of 10% ethanol blending in petrol in June last year, and it has now set eyes on 20% blending. India has taken yet another big step, latching on to the opportunity offered by the G20 presidency. It has established the Global Biofuel Alliance. In the G20's 14th Energy Transition Ministerial meeting in Goa, 19 countries joined this global alliance to expand the deployment of biofuel. On the sidelines of the G20 event, Petroleum Minister Hardeep Singh Puri said, "True success of Global Biofuels Alliance will depend on moving this project from a project of the government to the project of the people." Puri also quoted US Energy Secretary Jennifer Granholm. She has said that it is a critical step in biofuels' journey with the aim of moving from test tube to test drive and field to fuels. The government has said that the alliance will be aimed at facilitating cooperation and intensifying the use of sustainable biofuels, including in the transportation sector. Emphasis will be on strengthening market, facilitating global biofuels trade, development of concrete policy lesson sharing, and provision of technical support for national biofuels programs worldwide.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Share of biofuel in renewable energy mix has increased considerably over the years. It is over 12% now. Well, that is all for today. For more news, views and analysis, please log on to business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.